So the methods of depreciation, we saw the straight line method and the reducing balance method. I'm sure along the line, I'll give you bits of it. But today we are looking at the double entry for, acquiring an asset, using it throughout the period, and finally disposing it off. So if you reckon, we just want to go through the life cycle of an asset. Okay, what I call the life cycle of a fixed tangible asset. So the first stage is when you buy it or when you acquire the asset, so acquisition. And the second stage is its usage. So every year you are going to use it, and as you use it, it's going to depreciate. So yearly depreciation. And then finally, the third one is the asset being disposed of. So if I'm giving a specific example, I'm sure you bought or you acquired a nice shoe probably in the year 2010. Okay, you've used that shoe for a number of time, and now that shoe is no more, right? So that's the essence of what we are going to do. So before we even go back into the debits and credits, I want to cite this scenario so that we can all follow and see how best we can work around this. So let me make it more engaging. How many of you have bought something recently? Maybe a shoe or a bag or... Yes, mommy. You bought a dress?
No, short.
Okay. So Mameya says she bought a shorts. How much was the cost of that shorts?
It was 100 cities.
Why are you laughing mentioning 100 cedis? Okay, so you bought the shorts for 100 cedis. Okay, that's good. So how many years do you intend wearing it or using it?
So I become fat.
Come again, I didn't hear that.
I don't know, it depends. If I become fat, then I'll stop wearing it.
So how many years would it take for you to get to that point where you will not use it? Just an estimate. It's an estimate.
Maybe 3 years.
Did you say 10 years?
No, 3 years.
3 years, okay. So if we are making sense of what Mami is saying, the useful life of the shorts she bought is going to be 3 years. Okay. So that is the period within which she's going to make effective use of that asset shorts. Okay. That's great. And after the 3 years, if you were to sell it, how much will you sell it for?
Like 20, 30.
30 cedis. Okay. So let me find out from the rest of us. If after the 3 years, she's willing to sell it off for 30 years, what is the name of that amount? Sorry, sell it for 30 Ghana cedis. What is the name of that amount? The value of the asset after the useful life of 3 years. What is the name? Because we saw that the last time. Profela, can I come to you to get the value of the asset after the useful life is called?
Scrap value.
Thank you very much. That's the scrap value. So after 3 years, Mami is saying that the value of the shorts will be 30. I'm sure by that time, now I share Manika Netuni at 30. I'll be 30. Okay, so that is great. Now, I want us to use this information to discuss the double entry and make it more meaning. We are just assuming that we are having just this asset as the shorts with a cost of 100 cedis. Okay. But then I didn't ask, Mommy, what date did you buy? Do you remember the date you bought it?
So please, Sunday.
The date, as in when? Did you buy it 1st January or 1st February?
26th May.
Hey, so you remember all that? So good. So 26th
It
May.
was this Sunday.
Okay, 2024. Okay, good. So let's start work. Now, when you buy an asset, you need to record it in your asset account. So in the case of Mami, we need to open the asset shorts account. So let me open that asset shorts account. Please, if you have any question as we progress, feel free to ask me so that I can answer. Okay, so let me put in the title of the account. That's the shorts account. Okay, so this is the asset account, shorts account. Then you also realize that every year you have to depreciate the asset. Okay, but we are going to get to that point of depreciation. And I think I'll ask Mommy the rate at which she wants to depreciate it and the method she wants to use. Now, if we open the short account, the first thing we have to do is to record the transaction regarding when we acquired the short. So if you look at the information here, the short was bought on the 26th of May 2024 for 100 Ghana cedis. Now, if you buy an asset, we all remember you debit the asset account and you credit cash if you use cash to buy it, or you credit bank if you use check. But under this topic, most of the times we don't pay attention to the cash account or bank account because the requirement of the question do not necessarily ask you to do so. So let's put in the debit in the asset account. Let me put in my currency. Okay, so we have 26th May 2024. So I'm sure Mommy used cash. So let's use cash 100 cedis. Okay, so we have recorded this in the year 2024 when we bought it. But remember that Mommy is saying this asset is going to be used for 3 years. So all other things being equal, it means that she's going to use it in the year 2025 as well as the year 2026. Okay, so well, the date is an assumption. So when we get a classical example, you would realize that as you use the asset and go into those years, it makes realistic sense. So it means that this asset would also be available in the year 2025. So it only makes sense that when you have completed the year 2024, you carry the balance on the asset to the next year. If I want to make what I'm saying sensible, then it means that if in the year 2024 nothing happened regarding selling the short or buying additional shorts, then we close it and move to the next year, 2025. So you do your normal balancing of account and move it to the next year. So 2024 will end on the 31st of December 2024. So if we are balancing this, 100 against 0, so the difference will be here, and that's the balance carried down. And normally we use the closing date for our carry downs. Let me acknowledge Prof. Joel and Prof. Ni Okai. Prof. Ni Okai, I want to believe that is Prof. Sego. Can we have them introduce themselves, Prof. Joel and Prof. Ni Okai? I think Prof. Joel can go first, and then Ni would. Okay, let me continue. I think they will do it at the appropriate time. Okay, so 31st December 2024, we are going to carry this balance to the next year, which is the year 2025. Okay, so let me underline my figures well and balance it to the next year. So we can. Okay, so the next year will begin 1st January 2025. So we are going to acknowledge we have a balance on the shorts. So balance brought down 100. I believe this is okay for us. Okay. So in the year 2025 too, normally what you are going to do is to determine whether you bought additional shorts or you sold some of the shorts. In this scenario that we are using, we are only looking at the case where we bought just one short, which is going to be used for 3 years. So if you are following me, every year, since you haven't sold the nika or the shorts, you would have to be carrying the balances to the next period. Okay. So let me do that till we get to the 3rd year where the asset was disposed of, right? Because Mamiya says that the shorts will be disposed of after 3 years. So let's do the balancing of the 2025 since nothing happened. So 31st December 2025, balance carry down. Please, if there's any question, feel free to let me know. Then we go to 1st January 2026, balance brought down. So we are in the 3rd year, which is 2026. And that is the year Mame will sell the asset or sold the asset, if I'm using realistic English. Now, please pay attention here. If Mame sells the asset, what it means is that if you go into her bag where she keeps these assets short, you would not find that nika there. So it only also makes sense for you to remove it from the shorts account. How do you do the removal? You do the removal by crediting the asset account with the cost of the asset. With the cost of the asset. Why are we doing that? We are doing that because at the time that we bought the asset, when we acquired the shorts, we debited the asset account. So if you are selling it, if you are disposing it off, it only makes sense to credit the account. Because the essence is that you want to cancel the debit you made because the asset is no more. So for the year 2026, we are going to, let's assume that probably she will sell it around, let's say 15th of January 2026, just an assumption. So on that particular date, 15th January 2026, we are going to say the asset has been disposed. So disposal, we put the cost of the asset, which is 100. If we do that, it means that there will be no balance on the short account. As a matter of fact, if we are balancing the year 2026, there will be no balance carried down because it is zero. The debits and the credits are equal 100. Now, having done this, let me write a summary here regarding preparing the asset account. When you are preparing the asset account, dear ladies and gentlemen, what you do is that you debit. So you debit when you buy, and then you credit when you sell or dispose the asset off. In both cases, what amount do you use? You use the cost of the asset, and that's very important. The cost of the asset. That is what you use in both cases. Please, does it make sense to you? Okay, for the benefit of those who just came, we are saying that if you buy an asset, if every business buys assets, let's say for instance, building or a vehicle, you have to record it in your books. Okay, so like we have been doing, when you buy a motor vehicle, you open the asset motor vehicle account. And what do? You debit it. So when you buy an asset, you debit the asset account. But in this case, it can get to a point where you sell off or dispose the asset. And I'm saying when you dispose or sell off the asset, credit the asset account. With what value? The cost of the asset. I'm stressing on the cost of the asset because if you are not careful, you would use how much was realized from the sale. So in the case of Mamiya, she says that she bought the asset at a cost of 100 and she's expecting to sell it 30 Ghana cedis. So if you are not careful in your asset account, you'd record 30 as the value you sold the asset off for. And I'm telling you, no, in the asset account, you don't put that amount. You put the cost of the asset. The essence is that you want to cancel and remove the asset from the account. Is it making sense now? Let me hear from one or two of you before I continue. Yes. Any confusion? If you are confused, tell me. Okay, so finally, I'm just summarizing. Under the provision for depreciation, double entries, one of the accounts you have to prepare is the asset account. Preparing that account is very simple in the sense that when you buy the asset, debit it, and when you sell it, credit it. But always remember that since the asset is going to be used for a number of years, let's say for instance 5 years, you always have to be balancing the year. So imagine if you bought an asset in the year 2024 and it's going to stay in the business up to 2027. Then when you are preparing your account, this is what you do. 2024, you prepare, balance, and move to 2025. 2025, you balance, move to 2026. 2026, you balance, move to 2027. So you have to do year by year kind of recording. That is what sometimes students, find a bit difficult. But the principle is when you buy the asset, debit. When you sell it, credit. With this knowledge, let's look at the first scenario or first illustration and see how we would make the asset account very simple for us. Okay. So please look at this illustration 7. One of you should read it for me. Who is ready to read? Prof. Ni Okai. Can you unmute and probably read the question for us? Prof. Ni?
Yes, sir.
Yeah.
The illustration 7.
Yes.
So, use the information below to prepare A. Motor vehicle account. B. Provision for bad debt on motor vehicle account. C. Motor vehicle disposal account.
Okay.
Alex bought a motor vehicle for US dollars
Yeah.
50,000
Yeah.
on 1st January 2017.
Okay.
Another motor vehicle was bought on the 1st July 2018 for US dollars 28,000.
Okay.
He decided. I can see it.
You can't see it. He depreciates. Make it a bit.
Yeah. He depreciates the assets at 10% per annum on a straight line method.
Okay.
On 30th September 2019, he decided to dispose of the assets he bought on the 1st January 2017 and realized US dollars 30,000.
Okay. Thank you very much. But Prof, please tell us your full name and your school so that at least we can get to know you better.
Tego Nyokai.
Okay.
It's my full name. And I'm from Accra Academy.
Oh, okay. The Blue Boys. Okay. Thank you very much, Prof. Okay, so ladies and gentlemen, as Prof read the question, you would observe that we bought, or Alex bought, a certain asset, and that asset is a motor vehicle. Now, if you go through, you will realize that he bought one on 1st January 2017 and also bought another on 1st July 2018. Okay. Now, they speak to us about the rate of depreciation. But again, we are being told that on 30th September 2019, he decided to dispose or sell off the asset he bought on 1st January, which is this first motor vehicle with a cost of 50,000 US dollars. So I'm drawing your attention on the fact that regarding the asset account, the information you need is assets that were bought and assets that were disposed or sold off. Because this is the information you would need to prepare the asset account. Okay, so before we solve the question, let me quickly address the issue of our break time. So normally Zoom does not allow us, it only allows us on 45 minutes. The more reason why I have 3 sessions with the various login details on the page. I'm saying this for our new members. So if the session ends, you go onto the page and pick the details for the next session. So this is our first session, which is ending in less than a minute. So when it does, please reconnect with the second session details on the page, and then we'll continue the class. So let's meet in the second session and prepare the asset account with this information given us. We have 1 minute. If you have anything to ask or tell me, please go ahead. Okay, I guess there's nothing to ask. So let's meet in the second session. Thank you very much, ladies and gentlemen.